All right, so thanks everybody for being here. I'm Chris Austin. I'm a partner at Orrick. I'm the head of our capital markets practice and a technology company lawyer. And I'm excited to be here talking about crypto. I've spent a significant amount of my time over the last 6 to 9 months working on this. And one of the fun things about this community is that we're all kind of in it together. I actually met David last week. He was the moderator and host of a separate conversation about crypto. And we're very much at the very beginning of this area. It's also an area that, because of the regulatory concerns, I told David yesterday that after these events, usually the lawyers are running around trying to get the VCs to call them back, handing their card out. I had 4 VCs and an investment banker afterwards reach out and say, hey, can we follow up after that? And so I do think it's an area where the legal and regulatory regime is very uncertain, but there's a lot of interesting stuff to go through. I'll let each of the panelists introduce themselves, and then we'll go on with our conversation.
Sure. Yeah, as Chris mentioned, I think I find myself spending more time talking to lawyers other than Chris than I'd ever hoped to. So, but otherwise, it's a fascinating space. Excited. I think it's going to be a great panel today. My role has been kind of constantly evolving. Right now, I'm the Chief Strategy Officer for Galaxy Digital Assets, which is a diversified digital asset-focused investment firm. We're launching a macro liquid digital asset fund in the space, and also have a parent company that we're doing a number of different things.
Hey everybody, I'm Jimmy Morgan. I'm general counsel for a broker-dealer by the name of Genesis Global Trading. Some of you guys may know our parent company, DCG. If you guys are pitching ICOs, you might know Barry or Travis and talk to those guys. That's our parent company. What we do is we provide liquidity for various cryptocurrencies. So where we kind of fit into the whole ICO equation is, well, once you've you've hit a home run, you've raised 20 mil, 50 mil, 200 mil of Ether, and you want to then monetize that. And where do you go? You can't really go to an exchange. It's not the most feasible or efficient way to monetize that. You'd come to an enterprise like Genesis, and that's what we do. We specialize in large transactions of cryptocurrencies.
I'm Jacqui Hatfield. I'm a partner at Orrick. I head up the financial services regulatory team in London. And I do a lot of fintech work and have spent quite a lot of time, again, over the last maybe actually 4 to 5 months on ICOs. And I'm here to give the UK/EU interpretation of them.
So one of the interesting things about this is that it's very much an international endeavor, and as evidenced by the fact that on Friday the U.S. Securities and Exchange Commission issued a cease and desist order against a couple of Canadian individuals running the Plex coin operation, which looks pretty much like out-and-out fraud, at least according to the complaint. And so I think that as we sort of sit here and talk about this, I'm going to ask David first to give us your sense of the current state of the play. You said state of play in the market. You said it's always nice to come in on a day the market's up, right? So talk a little bit about what you're seeing right now in the broader cryptocurrency market.
Sure. So, for one, I think where we are today, and I meant that, it seemed like we had a couple of conferences last week, and somehow around conference calendars where those seem to be big catalysts for the industry or just continually drive investor interest. Ultimately, it's been a very eventful year. We've seen, I think and I've been around the space for a couple of years now, I'm still thinking about exactly how I'm going to define this year. For a period of time, it was the year of the ICO. It still might be. When I look back at the last couple of years, 2013 was the first really breakout in Bitcoin that caught a lot of people's interest. 2014 was the aftermath of that. 2015 and 16 were more the banks and the companies starting to like blockchain but not Bitcoin. And I think this was maybe 2016 might have been the resurgence of Bitcoin, and this is the year of the ICO or the emergence of Ethereum and other platforms. Where we are today is, I think we've gone through this initial hype cycle where people have realized, all right, there is some merit to these cryptocurrencies, digital assets, and people are really starting to sink their teeth into it. And it's still wide open, right? We don't know which regulatory agencies are going to step up. We don't know how the IRS is going to come out on a lot of this stuff. So we don't know internationally which countries are going to stake their claim or try to be more tech-friendly or try to clamp down on it. And so it's definitely a fascinating period.
So I'm going to ask Jacqui about the international component of it, because I think that my sense is that people are looking to the U.S. For guidance at some level, but on another level that there's so much uncertainty here, which we'll talk about a little bit more, that they're also looking for other safe havens. And so what are you seeing right now in Europe?
Yeah, because I find it quite interesting, because normally we are behind the States, and I'd say we are to a certain extent behind in the stage where we're at, because we're at the stage where the VCs are thinking of going in for the ICOs, but are not quite there yet. So we're behind in that kind of stage. But what we are able to do, which you can't do in the States, is that we're able to classify them, and we can give advice on the regulatory status of them without the fear of the regulator coming in and just closing everybody down or saying, well, that's you can't do any of them. So in the UK and across the EU, if you have a utility token and it only represents digital value, then it's unregulated. You have to look at, is it a fund which is investing? In that case, then it is regulated. Is it an equity? Does it have share equity-like rights? For instance, does it have voting rights? Does it have? Does it give a dividend? Does it have preference on the liquidation? If that's the case, then you treat it like a security, and the promotion restrictions, etc., apply to it. So it's kind of much easier to advise. Now, we are going to get regulation, but what is happening is that the EBA, the European Banking Authority, has essentially said that in terms of cryptocurrency, they still don't feel that we're in a position where there are financial stability issues, so that they need to come in and regulate it.
The entire value of cryptocurrency is basically Facebook, right?
Yeah.
So it's, at some level, it's not a systemic risk yet.
Yeah,
and
they don't know how to deal with it, and they're able to avoid it. But the problem with that is that, in actual fact, what's happening is that each individual member state is grappling with the area and is coming out with its own legislation to deal with that. Now that takes away the whole kind of joy of having the EU, if you like, because you can just say, well, this is the position in the EU. There'll be some variances, but you can pretty much guarantee that it's going to apply.
See, I think that's still a huge improvement over the United States, because, we have our CISO, our Chief Information Security Officer. He's from Canada. So when he joined the team, just explaining the difference between the states and the federal system is a huge learning curve. And then on top of that, we don't even have just one federal regulator. We have, a regulator for commodities, a regulator for securities, a regulator for banks, a regulator for consumer products, and I think the U.S. just has it is what it is, and unless we're all going to move, we have to deal with the system as it is. But it's, I think, way worse, I guess, here in the States in terms of figuring things out, particularly for new companies that might not be used to, securities regulations or this level of state and federal regulation. So I think you guys over in the EU, even if you take every member state having a little variance on it, it's probably a better improvement than 50 states and multiple federal regulators, all kind of.
Yeah, I completely agree. Yeah, but one thing that you have done, which we need to do, is that you've classified Bitcoin. Yeah, you've classified it as a commodity.
Yeah.
Yeah. We won't get any regulation around the cryptocurrencies until they've classified it, and nobody knows what to do with it, where to place it. And the fact is that in order to grow the cryptocurrency world in the EU, it does need some form of regulation, in my view.
I'd say though, even with the commodity definition, it's still not foolproof, because you have the SEC is still very much active, and traditionally They wouldn't be if it was in their jurisdiction is the world of securities. So, but I think there's a dispute over the federal regulators on figuring out where the boundaries lie and where each can.
Do you think some of this is actually political, as in it's a bum fight really between the CFTC and the SEC, or do you think it actually is in reality?
I don't think there's political between them. I think that they can coexist. And I think with Bitcoin, I mean, the IRS has gotten involved. I don't know if you saw that the IRS has asked for information from Coinbase, and because they do treat Bitcoin as an asset.
Yeah, it's a property for tax purposes.
Right, so you buy and sell.
Yeah, all of these jurisdictions have got the tax side sorted, haven't they?
Right, exactly. Right. It's true. The IRS, even with illegal activity, criminal activity, they don't care necessarily about the legality as long as you pay.
Yeah.
That's what they're concerned
and
about.
we've classified it as cash in the UK for tax purposes. Yeah.
So I do. I think that one of the things that's interesting, and people have, we get inquiries all the time from people who want to do ICOs, and things have moved very, very fast in terms of the awareness. The DAO report came out in July. If you haven't read that yet, you should go look for it, July 25th, and it's DAO, Distributed Autonomous Organization, and it laid out some of the framework for what constitutes a security or not. I've spent a lot of time, and Ed Eisert, who's one of my colleagues who's here, spent a lot of time with other lawyers. We've spent more time collaboratively with other lawyers than is normal in our world. Normally we're competing for clients as opposed to trying to figure out what the regime should be. But Morrison & Forrester and Wachtell and Debevoise and Plimpton and Cooley and others, we're all kind of coming together and saying, okay, let's all try to figure this out. The SEC won't help us. SEC has pretty much said we will regulate through enforcement. And so that's a horrible place to be.
That's the worst. It's the absolute worst.
Right. Because then you're kind of sitting out there. And I literally, 3 or 4 months ago, when it was not quite as clear, I think it was right before, it was probably about 3 weeks before the DAO report, a guy says, it's a gray area. I want to do an ICO and raise $50 million. I've been trying to raise money for the last, a year and a half. I can't raise $5 million from the VCs. There's all these punks out there raising. This is a guy who's like, his 40s, he's done their business. All these punks raising, $50 million in 3 hours, and why can't I do that? He said, well, I said, it's not really a gray area in some ways. And he said, well, it's kind of gray. And I basically made him a deal. I said, look, if you want to go do an ICO right now, go ahead, set aside a $5 million securities defense fund, hire me to do the securities defense when the SEC comes after you, and it's good. So I realize I've been acting against self-interest, because what I should be telling everybody is, go do it. Go do an ICO. That's fine. No legal opinions, but just do it.
I'm going to take the view. I think, I've been pleasantly surprised. I think the regulatory approach by a lot of the agencies in the U.S. has been pretty good. It's been very tech forward, and from all my conversations with different agencies, their approach has been, well, it's an interesting experiment. They've heard there's been enough people, industry participants, who've gone and educated them about it, and they're not clamping down on things. Every piece of regulation, people get worried when they see a headline. I saw a headline out of the UK this week, but when they see the headline, like immediately after the DAO report, the very next day I received a bunch of inbound from people that are doing ICOs who were saying, well, the SEC just put out this notice on it, and this is why we're not a security. Right. So it gives, every bit of regulation gives some,
it does.
It gives some credence to the whole thing.
Like one of the questions, I don't know if you've heard from anybody, one of the things we've talked about doing, we haven't done yet, is to go and seek a no action letter from the SEC to basically get them to say this isn't a security. They'll be loath to do that because I think they want to maintain, they basically said it's a facts and circumstances test. And the DAO report was very helpful. It's, at some level, a bunch of us wrote client alerts afterwards. At some level, it wasn't that surprising because they more or less said that we don't care what you call it. You can call it a duck if you want, but if it's a security, it's a security. It's regulated by securities laws, and we're going to protect investors. And so I do agree with you from the perspective of that the DAO report was a very soft way to start, right? They didn't take enforcement action against anybody. They did lay out.
So was that brought out by the SEC then?
Put out by the SEC.
Sorry. Okay, well, that's really useful.
I'd actually argue the other way. I didn't really find it terribly helpful.
What did you can do? It told you.
I think
it set a really easy boundary condition on one end for what you can't do.
I mean, right? My biggest takeaway was from that was that Ethereum or Ether itself is not a security because they didn't go after the Ether sale. They went after the DAO. Right. So that was my kind of between the lines biggest takeaway. I think they left so much unsaid, and they haven't given any further guidance on, you know, what's an acceptable utility coin, or you know, providing anything, any actionable takeaway. That I was, maybe, you know, from my perspective, I thought, yes, well, helpful. I wish it were even more.
So let's talk. I want to ask you. It'll go to the same place I think you're probably going to go, which is there are workarounds right now, and there have been a few true ICOs done with Counsel. So, although I would note that most of them are done in jurisdictions other than where the company is organized. So, for instance, Kik, which had Union Square Ventures invested, did a pre-sale, and then they actually did a formal token launch, saying that they had a utility token with their network up and running. They did not offer tokens in Canada where they're organized because the Canadian securities regulators said that they couldn't be comfortable it wasn't a security. But they did offer in the U.S. and as a utility token. I don't know of anybody else who's actually issued utility tokens in the U.S. I think most ICOs I know of are actually SAFTs or other pre-sales where they're selling to accredited investors and they're complying with securities laws whether or not they agree ultimately that's going to be a security. Is that do you? So I'm supposing this, and I'm going to ask if I'm wrong, if there are others that I've missed so far.
I'm sure, David, you're probably more well versed in the ICO world than myself. But just as a general observation, I find it kind of a challenge to declare yourself as a utility coin if you haven't even built out what the thing is supposed to be doing.
Right.
So I think the solution around that is the SAFT approach.
Right.
Be saying like, okay, so before the system is built, we need to raise money. We'll do that through a vehicle, a SAFT, which for the people in the audience, they waive the argument whether this is a security or not. A SAFT is, by its definition, a security. So that's why you could.
It's a simple agreement for future token. The idea is it's basically a contract that allows you to be issued a token in the future when the network's up and running. And the idea is that you sell a security to people, to accredited investors, and then when the network's up and running, you can then issue additional tokens, and the SAFT will convert into the tokens.
Yeah, and at that point, if you have a real system, then you can actually call it a utility token because it can actually do something. Now, but I mean, David, that's just my sort of outside perspective. I know you have more of an involvement in ICOs.
Yeah, I've gotten very deep, almost too deep into ICOs, unfortunately. But actually, even going back to your point, for Ethereum, we don't know necessarily based on what the SEC came out with that it wasn't a security. They didn't. They raised money. I participated in the ICO. They raised money before they had any tech launched, right? Except the difference then was that it was done much more. People sent Bitcoin to an address. There were no legal documents. There was nothing crafted around it. And then eventually, a year or two later, people scrambled to say, "Hey, what is this weird token other than Bitcoin that I went in for?" Right, and then
it was a little bit more like crowdfunding. So that was actually one of the areas of safe harbor is kind of this idea of crowdfunding. If you're just giving something with no expectation of a return, I kind of felt like the Ethereum Foundation was like that, right? That there were people who were believers in the concept, maybe worth something in the future. But it was much more, like eventually maybe we can do something with this, and if not, then it's at least somebody's doing something that's innovative.
I mean, having participated at the time, like there were this concept of ICOs again, like what we're seeing play out just again to like a more high level is the same kind of cycles that we saw in the tech bubble and through different tech generations, the 90s, Tech 2.0 in 2000, and Tech 3.0 in this latest run. We're seeing those cycles just happen faster in the digital asset and blockchain world. So a lot of the same ideas that people are doing and raising ICOs around today, people had 3-4 years ago, 2013, 2014. There were a couple of other ICOs at the time, Made Safe, Counterparty, a couple others I'm not thinking of right now, that raised money in 2014, and Ethereum is one of them, right? And people fully intended to invest in them because they thought they were going to get a return on it.
But the fact is that things move on and the regulators need to move on with them. It's totally unrealistic for them to come down on Ethereum now and go, well, with the benefit of hindsight, this is what should have happened.
There's also 1-year statute of limitations for securities fraud actions in the U.S. And so I think that at some level, that some of those, they're kind of old and cold, and they've decided there's nothing, they don't know who to prosecute.
The genie's out of the bottle with that. You can't,
Right.
But certainly in the UK, the FCA tends to react. So it waits until it has to do something or feels that it needs to do something. And then it will come out, and the beauty of it is that you then get a consultation, and then it starts from a particular date. And that's what happened with crowdfunding in the UK, which is actually where I kind of see the natural kind of analogy to an ICO. And then they bring out the regulations that they feel are appropriate for them at that time.
I also think what we're going to see, and we've seen this happen a couple of times already, like with Tezos, these large class action suits, the regulators are going to come down a lot harder when they see bad actors in the industry, right? Like you said with Plexcoin, when they see, like right now, the impression I've gotten is they're going to go after clear frauds. They're going to, I mean, they're getting even faster and faster, right? They have, you know, looking ahead at next year, it's going to be really interesting as the landscape between utility tokens and security tokens plays out. And you know, there's a couple of operators at T0, Templum that are building the CoinList. They're building these security token marketplaces. I don't think that's going to. A couple of them think that that's it. That's looking ahead. We're only going to have this future where security tokens dominate all of the ICOs and ICO issuances. I don't think that's going to happen. I just think they'll get pushed into whichever jurisdiction it happens. We could see, you know, plenty of people that are issuing utility tokens have already gotten crafty, and they say they restrict U.S. investors, but yet if you send your Ether or Bitcoin to the address, right, they're still returning the tokens to whoever sent it to them.
Right.
And you can't actually guarantee that it's not actually going to be taken from a jurisdiction, can you? So you can, well, we didn't actively promote it there.
Mm-hmm. And we restricted it. We said
yeah, and we restricted it and said,
like,
yeah, don't. But actually we didn't, you might not even know.
Right. It's actually really tough because I briefly was in that camp that said, well, we should just call them securities and deal with the securities laws. But as you start to dig deeper, it gets really hard because most of these tokens are meant to be used on a blockchain as part of a distributed ledger system, whether it be an internet system or a system of accounts, or you know, whatever the platform is. And under the U.S. securities laws, if there are more than 500 unaccredited investors or more than 2,000 registered holders of a security, they have to register to go public. Facebook went public back before the Jobs Act because they had more than 500 record holders of their securities at that time, right? That they had to go public. And so the question is, if I've got this little startup company and I've distributed a bunch of tokens out there and there's a bunch of digital wallets that hold the tokens, how do I know when I've hit 2,000 holders? And if I have a security token and I want to buy computer capacity from David, David's, you know, he's on the network and we're working together and we're using, you know, Jacqui and I are working on one called the Threefold Foundation. So a Threefold token, they've got an internet appliance out there. You can buy and sell internet capacity. It'll negotiate a price and everything else. How do I buy that security? I mean, do you buy a car with a share of stock? Do you buy an ice cream cone with a fractional share of stock? And if you do buy an ice cream cone, do you have to provide disclosure to the seller of the ice cream cone about the value of the stock that you're using to buy the ice cream cone? Like, I actually don't know how transactions work on these networks if they're securities. And so I will say on behalf of my fellow lawyers that I think that people are like, oh yeah, we can do security, we can do a registration statement, but when you get down to what the business model is, I don't actually know if it works. I think that I agree with David. I think that we're going to have figure out how to make utility tokens work, ultimately. Now, there are security tokens. There are people out there who are going to raise money and do things where it actually is a security. And so the fundamental core of a security in this analysis, you'll hear the Howey test. I'm a capital markets lawyer. I've been a lawyer for 25 years. I've been a capital markets lawyer for 20 years. You know, I never dealt with the Howey test. I mean, you know, we sold shares of common stock. The idea of, is this a security? Like, is it, you know, what is this thing that I hold up here? Or something that I didn't spend a lot of time dealing with. But one of the core ideas is making money through the efforts of others. And so if you get dividends back, if you have the, you know, there's a whole bunch of elements of the test, but it's kind of a fundamental part of the test is if I'm getting returns from the efforts of others in a joint enterprise. And so there are lots of things out there that make sense as securities that aren't actually computing platforms. Now, do you need to do a blockchain, you know, token offering to do that? I mean, some of these things, not really. And you know, but I think that and this is where the problem becomes that you don't really need an ICO. And so why do they do an ICO? Because it's non-dilutive, because the token holders have no right to the assets upon liquidation of the company, right? So they don't share an ownership of the company. and because people think it's unregulated, and third, because there's people who are willing to pay a lot of money without a lot of inspection to figure out, there's people who are buying these tokens.
And one of the reasons is because they've got the cryptocurrency and they can't get rid of it, so they're investing it.
So Jimmy, why can't they get out of it?
In the ICOs.
Because you admitted that that in terms of actually transacting to get people out of these things, out of ICOs, it's really tough right now.
Well, like I said, we are a provider of in size of liquidity, so we're a natural for a lot of the issuers to come see us. But at the same time, we live in multiple worlds. We're a securities broker dealer, so we're regulated by the SEC, which is the very agency that's charged with enforcing the securities laws. So we work very discerningly with our counterparties because we don't want to offer our heads up on a silver platter to become the enforcement case, the use case that they might be looking for.
Let's just lay out what the use case would be. So David does an ICO with his new coin, and so the David coin, wildly successful. He raised $50 million. He's got a bunch of Ether sitting in a wallet right now. He says, crap, that Ether is thinly traded. Turns out that in order to buy office space, they're not taking Ether. They actually want to use this weird thing called the dollar. And so I need to get dollars. And one thing I'll tell you is that when people start calling cash fiat currency, I mean, you've entered a new world. So when we have fiat currency, so he wants fiat currency to go pay his bills, right? So how do you what questions does that raise in your mind now? You've got this really honorable guy here, impeccable credentials, who's raised a bunch of money from anonymous people all over the world. What problems could that possibly cause? Yeah,
we got several problems. One off the bat would be like an AML issue.
Anti-money laundering.
AML, anti-money laundering. So as a financial institution in the United States, we have to comply with the Bank Secrecy Act. And that implies that we know our customer. Now, David would be our customer, but we also know that David didn't just find the money himself. He got the money from somewhere else. Right. So the regulators...
You can't trace the money. So David comes to you with money of unknown provenance, and you're trying to figure out what you do with it, right?
That's a risk there, because, again, we would know you as our customer, but the regulators are fond of pushing and extending out the obligation, so it's not just know your customer, it's know your customer's customer.
But
But
David used SAFT launch, and so David got people's passports and everything else, and he knows that he sold to me, and he sold to Jacqui, and he sold to Lauren, and it's great. We're great. You can just tell looking at us. We're all so why can't you deal with this?
That's an excellent first step. David, you hopefully worked with Counsel, and you Orrick, and you structured your offering in a way that complies with the securities laws. If you went with the SAFT, then you waive the argument that whatever my token is, this capital raise is in the form of a security. So that's a good step in terms of us, but there'd still be some more digging that we'd have to do. We'd have to make sure at the end of the day that we weren't facilitating an illegal securities offering. So we'd have to engage in our due diligence process, make sure you did everything the right way, that you worked with proper counsel. And
so one of the problems is when he says, what he really wants is legal counsel to give him an opinion that everything was done properly, which we're not going to do. Correct. And so because one of the issues we have is that the only advice we can give people right now is based on the law, we think that you're okay today based on these factors. Given the fact that the SEC hasn't said anything yet, and that it hasn't been tested, and it might be wrong, and this, and you think it's a utility token, but it might actually be a security. And the problem is, by the time I get done waffling, Jacqui and I were talking on the way down here. By the time we get done with all our waffle words, it's useless to you, right? In fact, it's probably worse than useless because we'll put down all of the things that could go wrong, and so you look at that, and then your internal counsel looks at it. So,
but the other thing is that you know what the issues are, so you know there's a problem, so you just want to have something to.
Correct. I mean, at the end of the day, some of it is we have to build up a defense case for when I do get the call from the SEC and they say, Jimmy, you guys were involved in ICOs. This is crazy. What did you do? How did you know this wasn't an illegal securities offering? So part of that is I have my own analysis. I have my own outside counsel, and part of that also is engaging with the counsel of the issuer. And I think.
So I'm actually going to pull us back for a minute because I want to have people ask some questions. And I'm going to go back to David again. You're obviously still investing in these things, and so let's assume that we continue to get some clarity from the SEC, and let's just assume that the legal issues are okay and that utility tokens can be sold; they're not securities. Talk a little bit about what you see in terms of the market going forward, because it does still feel like there's a bubble. Bitcoin's over 10,000 right now, based pretty much, I think, on a view that ultimately it will become basically a true reference currency, even though it's a very small, it's a very small trading relative to other currencies in the world, and so it's gone up what 10x this year, more than 10x, and Ether was at what, $4? Somebody told me it was $4 last November. I said, shit. I really, I will say I bought a couple $100 of Ether, and I wish I had bought, $10,000 worth of Ether last November. I wouldn't be here now. I guess the Winklevoss twins are now billionaires after their Bitcoin investments. What do you think in terms of the next year or two? I mean, you're still active in the space. Where are people in that evolution between Internet 1.0, where there are a bunch of business models, and at the end of the day, for those of us who are around then, lots of people making money where they were, selling things to each other and inflating revenue and everything else. But eventually, real businesses came out of this stuff, right? There's like real ideas. So what's the real key learning, or the core of things that you're looking at as you're investing in companies that you think might actually have potential for the long term?
Sure. So I guess when I think ahead, in some ways, I think we've run too far, much further than I wish we had. I would have been very happy if the market had Bitcoin had hovered around 4,000 to 6,000. We had enough of a run in the price already this year. And I think just now, as I try to rationalize where we are and what the path looks like going forward over the next year or two, what I've seen happen, or what I think is going to happen, is this flush of capital into the space is now going to attract entrepreneurs, developers, people who've been around and now want to come and are interested to build real things on top of it, because we've run so far ahead of where the tech and the underlying development is. And I'm just kind of really hoping that we don't continue to run from here, because I think there is a chance, and we have gotten a little bit ahead of ourselves, and there's a chance we continue to do that. We've shifted our focus a bit from kind of looking at anything and everything to now really trying to focus much more on people that are building the platforms that are trying to bring in new participants to the market that can really touch and change people's lives. One of the ways I think about this is look, we are in a bubble. We're somewhat ahead, and to me, a bubble just means the prices have gone ahead of where the tech is today, right, and where development is. So do I think we're going to correct from here? I don't know. But what I know is that no matter what happens, after the price improvement from this year, there are going to be a lot more people working in the digital currency space next year than there are this year. And so whether it takes 1 year to catch up from the tech side or 2 years, right, at a certain point, I look at this as this massive wave that's going to change our lives fundamentally in a lot of ways over the next 3, 5, and 10 years. And so, around specific things, I think there's going to be I was making this case to somebody last night, even when you look at a lot of the tech companies that have succeeded over the last 10 years, the Ubers, the Airbnbs of the world, those are different than the tech companies of the previous 10 years. And I think going forward, those are going to be the ones that are going to be the first to be disrupted. They've built their business model essentially spending, Uber, I think if you looked at it in aggregate, has spent $10 to $15 billion of VC capital to go and acquire users and build their name and their brand, but they don't have a moat, right? People aren't loyal to Uber. This is actually one of the fascinating things, is that Uber and Bitcoin were started about the same year, 2009, and for a long time I was using the case that, up until 3 months ago even, that Uber was still bigger than Bitcoin. Now where we are today, right, Bitcoin is 2 or 3 times the size of Uber, and both starting from a period in 2009. If Uber was a public company, it would have been just as volatile, if it traded every single day like Bitcoin does, just as volatile as Bitcoin's price has been. It would have gone from 0 to 500 million to 100 million to 10 billion and back. And the other thing, you don't see people getting tattoos of Uber. People aren't building on Uber and helping out and contributing to the code out of charity, because they genuinely are fascinated by it and love it.
No, I agree. I think that some of the the idea of network effects. And so one of the reasons that they would be disrupted is that one of Uber's ideas is basically transportation as a utility, right? And so a lot of these distributed ledger and distributed network platforms are ones that, by definition, will probably replace some of that functionality. I do think also that, I mean, I guess from as we talk to clients, that broader blockchain applications, over time, and broader distributed ledger applications. At one point, the cryptocurrency phase, is one where I really do think that that lure of apparently free money has overwhelmed things. And I've worked with entrepreneurs for many, many years, and I can tell you that with some of these ICOs where they're raising $100 million without, with a relatively small team, that and no real experience shipping code, that just can't be a recipe for efficient development. Right. That's not happening. And so, because the other piece of it is that there are like 60 or 70 white papers landing on the desks of investors every week. Sorry, and I think that the number of successful of token offerings is actually relatively small. And successful being like more than $5 million. Would you agree with that? That the number of people who are raising more than $5 million in a token offering is actually relatively small. No, you don't have to agree.
I don't know. I mean, as you were saying that, I was thinking like, all right. Fortunately, I don't think we haven't lost money on a single ICO investment this year, so that's been a good track record. And along those ways, part of it has been. Man. Come on, you haven't time to lose it all. And there have been some bad ones, but part of it has been like that's avoiding a lot of the bad ones, avoiding a lot of the ones that. Go ahead. I've started putting.
And in terms of advising, that's what I'm doing as well. I won't advise on one unless I've met the issuer. I buy into what they're doing, and I've taken my own assessment on whether I think that this is going to be a sound. Does it smell right? Test.
I think that's true. I mean, I think people who are in the market who are working on these, because for us there's an opportunity cost to working with companies, because we usually, on many of these, we don't get paid until the deal's done, or we get paid a very small amount before the deal is done. And so, we're making our own bets about whether or not the transactions are going to be successful. And I think that's an interesting issue. I do think, I mean, it's very, very, it's an uncertain area. The more I know about it, the more uncomfortable I am in some levels. I'm very comfortable with some things. I'm very comfortable that you can sell a SAFT or that you can sell a security to people that has enough disclosure in it that I don't think there's a lot of risk from the issuer perspective. I'm less sanguine about what happens once they try to issue the tokens out of the SAFT, because there's this issue that you can't quite get around, that if I'm selling a security to somebody and they're buying it for investment purposes and then it magically transmutes into something that's not a security and all of a sudden has utility instead, they're still looking to get a profit on that. On the other hand, people buy and sell currencies all the time. That doesn't make them a security. They fit into they get treated as commodities, and so there's all lawyers are spending all this time thinking of analogies. Is it like a ticket reseller? So if I buy tickets to the new U2 concert and I go resell them, is that a security? Probably not. If David and I pull our friends and we put together $1,000 a piece, and I go buy a bunch of tickets and sell them, and then I give everybody the proceeds, is that a security? That probably is a security. Might not get enforced against, but if I go out and seek investors, $1,000 a piece, for me to go buy tickets and then find buyers of those tickets, then that changes. And so so you can look at, when you're looking at all these different things and trying to figure out what it is, it's actually very, very difficult. And so I think But
I think that goes right along with just cryptocurrencies by their very nature. I mean, take a look at Bitcoin, for instance, which is kind of immune to the is it a security or not argument. I think everybody's quite settled that it's a commodity in terms of regulatory status. But then think about it as an investment thesis. People are saying, well, what is it? Is it a store of value? Is it a currency? I mean, and I think it really depends where you are. Your geographical perspective has a lot to play. I mean, here in the United States, we have so many, we have an abundance of riches in terms of methods of payment. And does Bitcoin really fill that need? I don't think so. But one niche that it could fill is just a store of value. However, that I think would completely flip. That's a very U.S.-centric view. When you go outside of the U.S., I think very much it has a strong argument in certain regions that it's more stable than their own government's currency. So
in the developing world, it's very different.
So I think
thesis,
by
absolutely.
nature, cryptocurrencies are multiple things to multiple people. So when we're trying to figure out what it is, from a regulatory perspective, I think that sort of echoes.
Because I think it's exciting. I think the very fact that in the UK we've got VCs wanting to take part in the ICOs is good, because actually if you've got a startup in the UK, the VCs generally won't touch it until you've got the product built. So it's actually really difficult to get funding in that early stage. You're left with angel funding and potentially crowdfunding. But if you do the crowdfunding route, by the time you get to the VC side, VCs aren't really interested in it because it's messy. So you've got, but here we are with the ICOs. We're in the startup stage, and the VCs want a part of it. So that's a good thing. And then also, yes, again, if what you're doing is you're providing your banking to people who wouldn't otherwise have your bank accounts, and you're giving internet service to people who wouldn't otherwise have it, that's all really exciting, and it's important that all the issues get sorted so that we can kind of progress with it, because they're not all bad.
There's a chance in places like Africa where cellular basically leapfrogged the U.S. I had better cell service in the middle of Turkey 7 years ago than I have in Manhattan sometimes, and so I do think that there's a possibility that as you said, that the store of value concept would work and transactions would work. I will say for the U.S., it's hard to imagine really transacting regularly when it takes, I went to buy Ether, and it's taking a week to clear the transaction from fiat to Ether. It's like, okay, well that's...
You got to call Genesis. Yeah, we'll do it in a day.
It's a very small transaction. You wouldn't want to. So why don't we get some questions from people out here, and then we can we'll come back. Yeah, go ahead.
I had a question actually for everybody. There are a lot of jurisdictions that are looking to establish themselves, like Gibraltar, as as favored jurisdictions to locate ICOs. How are you all thinking about how this may play out? Right, you have companies and entrepreneurs that are making the decision not to be Delaware C corporations, but to be Gibraltar corporations.
Because I'm interested that a lot of them tend to be set up in you've got Switzerland, and they set up a foundation for it. And I think that's historic up to a point. And I think the Swiss regulator has been given the equivalent of a no action letter. But it's now starting to think a bit more, because they've been accumulating. But as far as I'm concerned, you don't need to go to Switzerland. I mean, you've got the tax analysis to do in any event, so you've got to match the tax and the regulatory. But from a regulatory perspective, I don't see why you can't set it up in the UK. Now you're saying Gibraltar, well, Gibraltar is UK based, so it's the same. You get set up in Gibraltar, then the same rules will apply. Yeah, I don't see an issue with that. So I find it interesting.
Many of the tax havens have talked about this. So Gibraltar, Cayman, you hear about. We're working on one of the Dutch Antilles right now. Singapore was big for a while until Singapore just clamped down and said no. At one point, they had some of the early guidance that said that they were commodities. I've seen a lot less of that. When we first were talking to people who were really focused on the foundation element, but then I think Tezos at a certain level helped drive that. Will continue to help drive that conversation, because it kind of highlights the fact that if you truly have independent trustees, then they may or may not agree to give you the money to develop the
and they're
products.
meant to be ultimately charitable.
Right, and they're meant to be ultimately charitable. And it kind of makes sense, because there is an element here where a lot of these things, there is an ideological idea of decentralized non-government interference in these platforms. And so the idea of setting up a foundation kind of makes sense. But I think ultimately that people want control. And I don't know from the tax perspective, it's interesting. You have to sort of analyze where people are. But if the bulk of your people are in the U.S., then the U.S. is going to reach you anyway.
I'm skeptical. I think that the U.S. regulatory regime thinks of itself very highly and will reach out and get you, no matter where you are, if you touch the United States in any way. I mean, my view on regulators is sort of, and this is kind of to frame the whole conversation. The regulatory agency is just like any other organization. And what's the primary goal of any organization is survival. So for the regulators to allow something to go on and they're not a part of it, I don't see that. I don't see the regulatory bodies just letting stuff go because, yeah, it might actually be truly innovative and there might be social benefit to it, but I don't think they're really, although that might be their motto, investor protection and other things along these lines, I think first and foremost, they're in a fight to survive. And if this is the next wave, they're going to want to be a part of it.
And being a UK lawyer, I would second that. I mean, you look to the US whenever you do anything because you're very aware that you've got regulatory creep coming in from the US. And then on the European side, you then end up competing because if the US want reach, then the EU does too.
Are you seeing anything in terms of how people are pitching projects to you?
They're getting creative, that's for sure. I mean, I think after like even Switzerland's starting to slow down, and now people are starting to go to Liechtenstein, and they're trying every island nation. I think the next.
You can get bank accounts there as well, can't you? So it has that advantage.
I've even seen teams that are operating and trying to do ICOs where the company is based in the U.S. send certain employees down to the Caribbean for a couple weeks at a time to raise the ICO, raise the pre-sales from down there, and they think that gets them around it. But
I had one where it was it's a Costa Rican company that was running lotteries, online lotteries in the U.S. and I was talking to Russian lawyers who were helping them. So I got involved advising them, and I said, first of all, it's illegal to do lotteries, and then second of all, after we had a video conference, I said, okay. So I was talking to Russian lawyers about cryptocurrency on a video conference. So the NSA is definitely after me now, right? But there's a reason that everybody uses Telegram. Who here has a Telegram account? Yes, yeah. It's like I never heard about Telegram until I got involved with crypto, and so but I think that it's interesting. So I guess the answer is I'd be more focused on the business model, and I wouldn't worry so much about the jurisdiction of a corporation. There are people where it makes a lot of sense. If we've got a joint client that in fact has quite a strong charitable purpose in mind, and there is absolutely an altruistic element to it. And so they're setting up a foundation. They're doing it in the Dutch Antilles because they've got people they've got one person in Switzerland, one person in Belgium, and so they've got one of these distributed teams with very few contacts in the U.S. And so in that case, if you're not in the U.S., why not stay out of the U.S.? Because the fact of the matter is that there are so many easy targets who are here that you have some slight protection from that. But on the flip side, they cooperated with the Quebec government, and when they went after Plexcoin, those were both Canadians, not in the U.S., and they've managed to find their assets and freeze them.
Yeah, I think if it all comes to me now, I'm not in the business of advising companies like you guys are, but from my perspective, in my view as I expressed it, I think the best way if you're going to go to the trouble of incorporate outside of the United States and you want to be outside of the jurisdiction of the U.S., don't take money from U.S. investors. That's really the,
if you really
the
want
way
to
to do
avoid
it.
the U.S.
Yeah, but I have a question. Like, you witness all this system. Like, you block the IP, or like you say like American citizens can participate in this. This is like, to me, is a complete like scam, or like a complete bogus, right? Like you have a ICO that raised $200 million they're not open to U.S. market, but in reality, like you look at like who holds these tokens, are 80% U.S. based. So like my question, and I asked this question to like a lot of lawyers, and nobody really can answer me, like, or at least clearly, at what point you'll see the SEC, kind of like go back and scrutinize these ICOs, and like, is this like okay, well, we draw a line now, we forget about what happened, or are the people, the founders that raise $100 million, or 50, they have to think about, hey, we should lawyer up? Because
I think they're still at risk personally, but I think here's what we're trying to do with clients. And the reason that somebody would block the U.S. IP addresses is that, and this is something that we talk to people in good faith, and they're talking to us in good faith, like, how do we do this? The fact of the matter is that in any case, as a company issuing securities, you have a duty to use your reasonable best efforts to sell those securities in accordance with the law. And so if I sell those securities, or if I sell tokens I don't think are securities to people, and I block U.S. IP addresses, and I have a contract that says that U.S. investors can't invest. David has informed me that those contracts aren't even worth the pixels because people basically ignore the contracts and put the money in, right? So, but as an issuer, at some point, unless that the problem becomes the problem becomes the sincerity of the effort, and if it's nudge nudge wink wink, I can't take it from the U.S., but just get that VPN over there and don't worry about it. Or you're advertising in a way that makes it clear that you're actually appealing to U.S. investors. That's one thing. If you make it pretty clear through word and deed that you're actually intending to offer them, at some level, it's not. It's kind of like when you sell things, you can't necessarily control what people do with it, and so. That's been my advice to people. That I don't
and
think
I
that
think
you can...
the analogy is very similar to just a normal equity offering. The fact is you do a private placement and you put in all the disclaimers and the legends. You say we're not going there, and you're doing that to protect yourself. But it kind of gives you no more protection than the kind of the ICO world.
Oh, see, in the U.S. it does because I can actually provide that they can't transfer the stock on the stock ledger, and so it was interesting in the science ICO where they were basically raising a fund. They raised the fund under 3C1 in the U.S. and said it could only have 99 U.S. investors, and they put all this language that said basically if you're the 100th investor, if somebody you can only sell all or not less than all, and we'll trace and we'll see who have the 99, and if you're the 100th and we do a distribution, you don't get anything. And so they basically try to impose through a smart contract economic penalties that will make people comply, but that's been hard. I haven't gotten people to actually tell me how they make people comply.
Well, I think as some of these security token platforms launch, I've heard some of the ways in which they're going to restrict the participants to only be accredited investors, and they're going to trace them. So to the extent whether it's something like science or a new security token that gets issued, or an ICO that's already happened, if they want to get onboarded onto it, everybody's going to have to do like a re-KYC through there, and the only people, it's going to be like a secondary market a split market where only people who go through the KYC or have raised money directly on the platform are going to be able to trade on there.
I mean, it's interesting. There's some interesting analogies. We're working on an IPO of a Delaware company in Poland. And in the Polish stock market, they dematerialize the shares. So they basically have a distributed ledger system where it's all book entry on the system. And in the U.S. law, under Reg S, you have to basically stop the flow back of securities into the U.S. And so they've been spending like the last 6 months working with the Polish regulators to try to figure out how to stop these securities where it's just a book entry coming back into the U.S., where you don't really have a legal contract between people in terms of the transaction. And at some point, we'll figure out that somebody will build a platform that will be compliant. And I do think, one thing to note, we always talk about blockchain, but we're working with Hashgraph, which is basically.
I would not suggest that Hashgraph is one, but there are a couple other platforms there.
Other people are working on distributed ledger platforms that might have different.
They attach special keys that you can only unlock, so you can actually, even after you sell the token, this token, just because you have possession doesn't mean that you can, it can be locked.
So my guess is that
there's compliance platform for sure.
So let me ask something. So what's it going to take the optimistic investors approach to this, to have like a sweeping tech-friendly overhaul of the regulations, so that we're not dealing the same way we're going through this in the tech world, so that we're not dealing with how we test and regulations that are in place from like environments that existed 80 years ago.
Exactly. Look, I think it's one of those things. So, not to get into politics, but New York City and our law firm are not exactly hotbeds of support for Donald Trump. However, Jay Clayton, who I know, is a person who actually has been in the trenches and dealt with these things. He understands how issuers have to think about things. My guess is that, and Jay Clayton's the chair of the SEC now, and Bill Hinman, who's the head of Corp Fin, is also a very good securities lawyer. Now they're from New York, law firms who are used to doing with white shoe problems and not, bearded tech guys in t-shirts and sweaters showing up to talk to them. And so I think that they have pretty clearly stated that they're not going to do a sweeping overhaul of the regulations. And it would take, now they can say that if we can get Congress to vote on something. That seems unlikely too, because here's the problem, that we don't want to stop innovation. And I do agree with you that they've been trying to figure out how not to stop innovation. But we also don't want widows and orphans to lose their life savings in scams. And the problem is that these things are very, very, very susceptible to scam.
So maybe ICOs need to restrict, put disclaimers and say no widows and orphans, not no U.S. investors.
Exactly.
I think it's overpowered. Like with all due respect, I think the idea of ICO scams that prey on people that are naive, it's overblown. I think there's a lot of people that like you're a computer scientist, like a young kid, maybe could spend $2,000 in Vegas or buy $2,000 ICO token. And I think the idea that we're gonna go after people that retire somewhere like in Midwest and we're gonna take their savings. I think it's a little bit exaggerated, but
and you get scams everywhere there as well. I mean, I remember doing there's a fund which had no underlying
pump and dumps, penny stock scams.
You get it everywhere. So
the problem is that I agree with you. That I think that, but it's very clear that there are people who are investing who have no clue what they're doing and are doing it based on seeing the returns that people are getting. So let's ask.
So I just have a basic question. What are the sort of various stages if a startup wants to do an ICO or they're thinking about it? What are the different service providers that we need to, hire? So we need a lawyer, we need somebody like CoinList to do the marketing and to do, help with the white paper. We probably need a technology platform like, AlphaPoint or somebody to do the digitization of it. I didn't know we need to pay a provider like an ATM fee to get the money out.
Oh no! That's not exactly what I.
Can somebody just go through one of you or collectively let us know what are the different companies we should think about working with in order to do a complete ICO?
Well, in the UK, I'm grappling with this at the moment. I have actually literally had people coming in going, Jacqui, I want to do an ICO. We want you to do it for us. I go, yeah, I'm a regulatory lawyer. Yeah, I'll tell you about the regulations. Whether I kind of do the whole white paper or not. No, I'm not equipped. But yeah, there are people in the UK who are setting themselves up as advisors to the ICO markets, and I'm coming into contact with those more and more. And from what I kind of see, their kind of services are more the kind of assistance in how you market, how you go about doing them from a commercial sense.
There's code. So I'll run off a couple, and then you run some more. So as you say, you have to. So it's a smart contract, right? So at the end of the day, one of the problems that's happened with a number of folks has been that the smart contract, it's code. If somebody finds a bug in it, then people can siphon off $50 million from the DAO. Because they figure out how to do an iterative transaction that I think it swept off micro payments on each transaction, and so there are people who are doing code audits. That's an important one. I frankly think that one of the big issues is, do you have something that actually makes sense as an ICO, right? So do you have something that...
Assuming you have a utility, assuming you have...
Yeah, a utility that's a distributed network type of utility that makes sense. And
what are the steps you need to take in order to get it out there into the market? And who do you need to work with? Obviously, I know you need to work with lawyers, right? You need to work with a CoinList or something to do...
Some level lawyers are kind of the third tier thing, because you have to start off with, what's the product, and then who would they deal with next? They would deal with the...
You probably need to find some advisory firms in the industry, people who will help you write the white paper, people will help you understand kind of the landscape, what competitors are out there, if there's some validation. So again, going back to your assumption that there's a real purpose for doing an ICO around it. You need the right law firms involved, some other relationships with developers in the community, there's a dearth of developer talent who understand smart contracts and actually know how to build a lot of these things.
And then I think in terms of marketing, that the marketing is actually really tough, right? That figuring out how to get out to people there's a plethora of conferences out there. I mean, we can go to a conference every week if we wanted to, and a lot of them give companies an opportunity to pitch their ICO. I think that one of the benefits, of course, is that everything's online, so you can get immediate feedback from people on what you're doing. But the most important, at some level, given the number of white papers that are crossing the desk of investors, it's hard to rise above the din. And so I think that a really, really good marketing plan and getting out in person to people, having a compelling story you can tell, it's a little bit like you're basically doing an IPO roadshow. You're doing an IPO roadshow because you're going out and you're explaining, and often in 3 minutes or less, why somebody should be really excited and give you their money. And as I say that, it sounds a lot like a security because I'm speaking to people like investors, but whether it's as a security or whether it's as this is a platform that's going to transform the world, and so you'll make money because everybody's going to use the platform. I mean, ultimately, that's what you're selling. You're selling this opportunity, and I think I think it's hard. I've listened to a bunch of the pitches, and they blend together. Because there's only so many new protocols that are going to transform how people use the internet. I mean,
and the analogy, I think, is the crowdfunding platforms, because initially people were getting the funding for their projects, but over time there are a whole heap of them that don't actually meet the level that they are expecting to get. And I think we're actually reaching that sort of point in the States where it's a kind of saturation thing, and harder to actually raise the money.
I give you two points. One, when you do meet with a law firm, because I know this from my outside counsel, various ones I work with, expect to meet with several people, because just as these issues cut across all different regulatory lines, they're going to cut across. Like, law firms are sort of organized. You have different content experts, but when you get into cryptos, it cuts across all the expert levels. So you'll be in the room with like 3 or 4 lawyers, and it's not just because they're trying to rack up billable hours. It's really because it cuts across many practice lines. Number 2, if you do hit the home run and you manage to get a huge raise, you want to make sure that you have a security person, because you will
security, not securities.
Yeah, security. Yeah, because you will immediately become a target, and anyone who holds large amounts of cryptos knows that they are under assault 24 hours a day. So it's essential that you have that piece locked up.
Imagining there are multiple people in this room thinking about doing an ICO next year, right? You've kind of outlaid kind of the regulatory risk. Would love to hear just if you had to advise that group of people today and say, yeah, should those people wait for a while? Does the market look, assuming that you have the right type of business model, does it look like a good time? Is the bubble over? Is there too much regulatory risk? Think about other ways first. Well, how would you respond?
So purely as a lawyer, look, waiting's great because at some level, because there will be more certainty over the next little while. The SEC is going to come out with other things. I don't think the bubble's over, though. I mean, people are pushing ahead pretty hard right now. I think that honestly, I would say that if you have a good idea, and you think that you can raise a pre-token sale to accredited investors, and so you can sort of check the box that you've given the disclosure that's required for an accredited investor to purchase the security, and you can get the money now. I would get the money now and figure out what you're going to do later in terms of actually making the token work, because it is likely going to get harder to raise money in the future.
And from a regulatory standpoint in the UK and the EU, I'd say do it now, because at the moment it's
grey enough.
It's certainly, if it's a utility token, then you're fine. But as I said, the different jurisdictions are starting to grapple with it, and they will come out with their rules. So yeah, I'd say before that happens, it's a good time.
In terms of market commentary, because I'm not in the business of advising companies, but from what I do see, because we sit on a trading desk and we've been talking to hedge funds and professional money managers since 2013, and we see that the conversations and who's interested is changed completely, and we see that there's still plenty of what I'd call professional money that's still pent up, that hasn't even hit crypto yet. Now, are they all going to rush into Bitcoin, and will it double again? Will it be at 20,000? I don't know. Or will they look for, will they think, okay, maybe we missed the boat on BTC, but maybe there might be some ICOs that are interesting? I'm not sure. I think maybe, David, that might fall into your more of a question that you attempt to answer.
Yeah, I guess just the hurdles have gone up a lot more, right? After some of the initial excitement going back to like May through June, July. At this point, I've seen too many projects that have gone out and raised capital through an ICO, or TGE, token generation events, the other new term people have come up with, and then spent, after raising 20, 30, 50 million, 150, whatever the number is, spend all their time focusing on how their token is trading versus building out the actual platform, or realizing that they're sitting on 50, 80 million, and now they actually can't hire the talent because the environment's gotten too hot, too frothy that the developers and anybody who has any real talent or is connected in the space thinks they can go and do their own ICO, that they don't, there's no reason to go and work for somebody and take a salary or do anything like that. So I do think after seeing the pendulum swing very far in favor of entrepreneurs and the terms that we've been seeing in a lot of deals, they're definitely swinging back towards the investors' favor and towards you know, a more rational approach to these markets.
So what does that mean? Smaller deals?
Smaller deals, and actually in thinking about the positives and ways to differentiate yourself to be helpful is we're starting to see like governance mechanisms be put in place for a lot of the ICOs, so where the participants or the teams that are doing them are locked up or actually have a distribution over 3 years, 4 years, whatever the time frame is. So
we're getting up to 4 or 5 in some, which makes sense if you think about stock options, right? You vest over time, so that you actually have to, that you don't get the value until you actually created something. And it's kind of the same thing here. It also creates more stability in the market. And in fact, some people are actually putting in place restrictions on the ICO when people purchase in terms of unlocking the coins over time, the tokens over time, so that you create more stability in the market. And so I think people are going to start to differentiate in terms of that business model, and does it look like it's being planned for the long term as opposed to a quick flip model? Yeah, for sure. And I also think that at some point you have to figure out, you know, people are going to iterate and figure out what's the next business model. What's the thing that's not, because there really are only so many internet protocols and computing protocols and platforms that are going to be needed. A long time ago, I had a client that...
yeah, but you say that, but it's quite interesting how the amount of blockchain development there is, and then you start to look at it and you think, well, why are you actually bringing this out? What's the purpose of it? Then you find out, well, actually, you don't really need it. Yeah, so there are a whole heap of these out there where you don't need it.
And that's the thing, is what you're doing something that actually takes advantage of the new technology, so takes advantage of a distributed ledger, and that the fundamental business is unique and differentiated, and then you can show how having a separate token, because this is one of the things that I'm still skeptical that in fact each one of these new distributed platforms actually needs its own payment mechanism, right? And the only real rationale I can figure out is that I can raise a bunch of money.
I see it again. I'm not in a VC fund, but I see it as almost like a cat and mouse game where people can figure out a way around the VCs. We can do it on our terms versus your terms. And David, maybe you're starting to see it come back around. And now the VCs are maybe large investors in the ICOs, and now they're pushing the ICOs to be changed in a certain way that's now more towards their favor. And it's sort of...
But it's institutionalizing it, isn't it? Which is kind of what we're trying to get away from at the beginning.
And I also think people are blending between that equity raises aren't going away, that having some good VCs involved can actually help with the token launch as well.
Just one important thing here to kind of put this into perspective a little bit is like when you think about it, I mean, maybe the numbers seem or sound large because of how quickly and the movements were this past year, but I think there's somewhere between $2 and $4 billion that's been raised in the past year through ICOs. That's larger than some venture capital to seed Series A companies, whatever the metric is. But at the same time, and if you look at the total market cap today of all digital assets that exist, is around $3 to $350 billion. That's less, when we had the tech bubble, that's less than the value that one single company, Microsoft, lost, right? That's let alone the entire industry. So I think about a lot of this stuff as technological experimentation, right? And we don't know, right? We genuinely don't know. There are new fields being studied. We have an intern who's studying crypto economics at NYU, right? And so part of this whole thing involves like thinking quickly, changing the way you think, incorporating new inputs, and being able to like analyze some stuff and be part of the experiment.
We had a guy yesterday came in and talked to Pete and me and started going into the Keynesian economics of the tokens. Like, wow, okay, I was an econ major, but you lost me on some of that. All sound like it would make sense probably.
Well, one thing that I was wondering if you guys had any thoughts on is And this follows from what you just said too. So thinking of, in terms of the monetization of the effort that goes into large open source projects. They're really creating these kind of value networks that if you're willing to do it for free, then a token that is based on the utility, sort of pre-buying and appreciating value over time, after all the speculation kind of settles down. I mean, that seems like it's really aligned with the entire system.
It is, except that the vast majority of people who are purchasing these tokens are not going to add anything to the open source code of the project, right? They're right there.
Well, you have speculation, and they might sort of benefit. If you could sort of let's say that Linux, if it had been launched.
Well, Red Hat made a whole business out of basically providing services around an open source platform, right? So you can do that, but again, those models are fairly few and far between. We'll need to wrap up pretty soon here. Lauren's back there giving me the. Go ahead, Hannah.
I have a question about reputational risk for all the providers. So there was a question about providers, but I mean, Orrick is in business, so reputation means a lot. And so how do you manage of choosing and dealing with ICOs? Like, we're in professional services business for like building code, right? So it's a challenge of. But the challenge that I want to hear how you address when choosing companies you would work with, understanding of how to make sure that future investors who will put money and inevitably many startups are failing, so it's inevitable. So it's like, how would you?
No, it's a huge issue, and Jacqui started off by saying that she wants to talk to the investors, to the founders directly. We do the same thing. I'm not taking any inbound just sort of over the internet. I see you do ICOs. We've got enough current clients who are, the head of our tech group, who actually incorporated Facebook, many years ago, he said, look, I had 3 guys come to me last week who wanted to do an ICO, and one's, has already made $100 million, the other's made $50 million, and so those people, you say, okay, fine, they have very similar reputational risk issues. We are working with newer entrepreneurs who come recommended through our network, but I think it's kind of like a heightened level of know your customer, right? That you have to have a sense of who they are and what they're doing, and a sense of what's happening. Years ago during the .com boom, I had a client that was doing a deal with Enron, and it was like a broadband swap deal, and I could not understand the economics behind it. I couldn't understand how it worked. And the guy who was in charge of the deal said, well, it's just too complicated. Just basically don't worry yourself about it. And you know what? I decided that I'm actually not stupid. And that if I don't actually have I don't need to understand everything. And there's a lot of stuff that people are doing with the code, with networks I don't understand. But if it doesn't sort of fundamentally make sense to me, then we just kind of tell them that sounds interesting, but maybe we should find somebody else. And I think all of us are doing the same thing. It's a big issue for Jimmy, right? Because you've got the, as you said, you're regulated, and you're putting your money into these things. And so he not only has reputational risk, but he actually has monetary risk. So how do you assess it? How do you think about these? How do you validate the projects?
It's been constantly evolving, and honestly, just time has been the biggest constraint this year in capacity, because I've only gotten more and more inundated. So I've kind of gotten back to my roots as a crypto investor, and unless it's something that, when I look at the youngest people that I work with, unless it's something that the biggest, geekiest crypto guys get excited about, right? I don't get excited about it. And so unless it's something that there's an excitement about it, and I kind of put some other filters in place, like if they're trying to raise over 50 million, I filter them. If they're not using Orrick, no.
At least
if they trade with Genesis.
Yeah. Exactly. Now I say that I look at the team. Like I look particularly on the legal reg side. I want to see who their counsel is. Now this kind of puts people in a bind, because if you're kind of a startup company, like how are you going to afford the rates of the gold star, the gold tier law firms? Now I don't know if you guys have sliding scales for startup companies, or I don't know. I don't know how it all works, but that's
not an issue. If you've got a good start, because we tend to, because again, we're willing to make some bets in terms of realization and defer fees until they get the deal done. And so again, that's why there's real money on the line, and time and opportunity cost with these things. But I will tell you that our general counsel is very much focused on this, and we've had a number of transactions where that that they want to put our names at the front, basically blessed by Orrick. And so no, you can't do that. You have to take that out of the marketing materials, because we'll give you advice, but you shouldn't be selling based on the fact that we've been involved with it. We're just not smart enough to make that a good bet for anybody. One more question. Anybody else?
You mentioned earlier that at the current price, Bitcoin's price is like way beyond where the technology is, and that this year there's going to be a lot more developers and community interest because of that. So like, what are some signs where you feel comfortable saying, okay, like the technology has caught up?
That's a good question. I guess it has been a bit of like a subjective thing. Like I was telling people earlier on in the year when the Bitcoin price was at 3 or 4K that my completely subjective fair value for Bitcoin was around 2,000 or 2,500, and with Ether it was similar. Like when it was at 300, my fair value was 150. Now, as there's been more capital that's come into the space, there's been more usage, there's been more people building different ideas, but my fair value hasn't gone up all that much more, right? So we've definitely deviated very far from that. It's going to require like a lot of people who start to come up with really innovative ideas and actually execute on bringing new people into the space to actually use things other than just like raising money through ICOs. Right now, that's been, again, going back to what I said at the beginning of like, when I try to think about it and over the holidays and I think back of like what defined this year, right? The biggest thing right now, and the fact that we're up here talking about it, is the birth of ICOs and really seeing that as a new funding mechanism, capital raising mechanism. But I think there has to be more than just that, right? We have to be using and interacting with digital assets in different ways. Like right now, I went from last year just telling people I used to give out small amounts of Bitcoin. I used to give out full Bitcoins, and years ago, and that was like just the quick Bitcoin 101, and just letting somebody see the value transfer from someone's phone to the other. But again, like you mentioned, like in the U.S., we have Venmo, we have other things. It doesn't really like make anything click in our minds. Now I have to go through like the Bitcoin 101 has evolved into a 101, 102, 105, and 200 level course where you have to actually see the value change hands, look at a blockchain, see how somebody else who wasn't part of the transaction can see like that the value changed, and then actually move it from there to a smart contract and see like how you can see the total amount of tokens in there and what the smart contract's designed to do, and how it's all this programmatic stuff that can happen without human interference, right? And so that's kind of painting the vision.
And over time, the financial institutions are spending a huge amount of money right now trying to figure this out, right? There's securities trading. There's all sorts of things that will go. You think about smartphones, right? When you BlackBerry email was the first killer app. I had a friend at Goldman Sachs who years after the iPhone was out still had a flip phone. He said, I have this phone that has this amazing app. It's called Voice. I can talk on this phone for 6 hours, right? And that was the app he needed in his world right then. So then you had email, and so all of us got untethered from our desks for email. And then all of a sudden you got location aware, and then you have Uber, and then because I was working with TripAdvisor when they were first trying to go to mobile. Right? Oh, you can't do mobile travel booking because nobody will book online. They can't get the information they need. Well, now they can. Now a lot of you look at the evolution of the mobile phone, and I think at some level, a smartphone at some level, blockchain and Bitcoin is going to be the same. That somebody's going to figure out something that's really valuable, and everybody says intuitively, yes, that makes a lot of sense. And it'll first be done, and then over time that will expand, and then oh, if you can do that, then you can. And so it'll evolve, and I think it's probably going to evolve very quickly once they get going. That idea, the big idea of trustless transactions and the ability to have security transactions between people who don't know each other, and where I can validate and I can keep track of what happened between us, and I can go back and trace and. At the end of the day, it's a regulator's dream, right? That this idea of having, and it also, if you can do that fast, that transactional nature of things is really, really exciting. And I think that's one of the reasons that we're all involved in this. And at some level, the token sales are basically funding mechanisms for people trying to find that application, and they're throwing stuff up against the wall, and there's going to be a lot of money lost because I think there's just no doubt that these are such early stage. If you look at the success rate of early stage startups, and anybody who's done it. I can tell you that my angel investing results will validate that 70 or 80% of these things aren't going to turn into viable businesses. It doesn't mean that something really, really cool is not going to be there. And my friend who put $5,000 in the first round of Uber isn't really happy that he was doing angel investing, right? And so some reason they have that. There's going to be the Uber where people make massive wealth, and then they're going to be able to use that to figure out the next thing.
See, one caveat that I'll just add about looking at the price of cryptocurrencies, Bitcoin, for instance. It's funny because most of a large percentage of the audience or the community involved in cryptocurrency comes from more of a technical background. The world where I come from is the world of equities, the world of trading assets. And the one thing you have to understand, right now the market is very distorted because there's only believers of Bitcoin or various cryptos are allowed in. There's no effective way to short the market. Now what that means is the people who don't believe and they think 10,000 is way too high, I want to sell first and then buy it back when it crashes down. There's no effective way for those people to engage in that philosophical idea. So right now the price alone is a little distorted. It's a weird market in that regard.
Yeah. And I also think that one of the reasons it is so high is because it's so difficult to get out of it, and you get all of these people coming out going, I want to do an exchange and I want to be able to convert quickly, and we'll do it. Once you can get out of it and it's very liquid, the price, I think, will. Well,
I just want to correct that a little bit. I mean, like, I've actually been very surprised and pleasantly surprised by how much liquidity has picked up this year, and that's one of the reasons why we feel like we're able to successfully manage a larger capital base in the space. And from 1 week to the next, even I've been impressed by just how liquid some of the markets are. Bitcoin trades $2 to $5 billion a day globally. Another one of the Bitcoin assets just that really.
Have you sold any of the tokens that you bought in the ICOs?
Yeah, so that was going to be my question.
So you've recycled into other investments.
Yeah. So I mean, I've moved.
Have you converted into fiat?
Yeah, plenty. And so I mean. Yeah, without going into numbers, yeah.
Right, yeah. We don't need numbers, but you've gone both.
So you've made real money.
There's sufficient liquidity in these markets to the point where, regularly we're seeing ICOs, people who are raising large amounts of money. And now the spreads have tightened from, so on something like a $50 million ICO, for example, about 3 months ago, if they were looking for a bid just to get out directly into fiat, the price might have been somewhere around 12 to 20% below where it was trading. Today, I think the spread would have tightened to about 7 to 10%. And on smaller amounts, $1, $5, $10 million, it's pretty easy to move it without moving the market.
Yeah, I don't think.
No, that's good to hear.
Looking at the state of the market again, I wouldn't say it's. I agree. It's not a liquidity issue. I think it's just a one-sided market, and that's not a healthy market. You need the bulls and the bears,
you need the
longs and the shorts. Right now, we have longs only. There's no effective way to short a cryptocurrency.
It's coming. It's coming.
Futures. This Sunday, the CBOE is launching.
Yeah.
And after that, the CME, and then NASDAQ.
Yeah, the CME is coming out on the futures.
Still, that's a derivative way. It's still hard to short the spot market.
Genesis does lending now.
Yeah.
There you go.
Yeah, we're trying to solve that, but there's not an advertising. I'm just trying to make a point to perhaps people in the audience who this isn't their area of expertise, markets.
Yeah, but in future, essentially, you can short. Yeah, with CMN. You'll see. I'm interested to see, when all the liquidity is coming to play with CME. My guess is as good as yours. I mean, what's your idea? Is gonna influx of liquidity is gonna increase the price, or people shorting is gonna bring the price down? I want to hear you.
Time will tell.
I think the future is going to trade higher.
Yeah, I think that it's going to continue to be supported for a while. There's enough hype, and it is very susceptible to external. I think it's going to be susceptible to external regulatory shocks. But I also think the SEC is going to be pretty careful that if they keep doing this incremental, knocking away at small things, because I haven't had a chance to get all the way through the complaint. But again, in the complaint, they're laying out, here's our view of what the securities law, here's why, here's what they did that was wrong, and so people will start to narrow the focus in terms of what they can do. So thank you all very much for coming. Thank you very much to the panelists for joining us.